together wonderful to me.
May I now request Dean Dr. A.R. Rajgopalan to welcome the gathering.
Good afternoon, everybody. You had your lunch? Good afternoon. It's my privilege, on behalf of Father Manoj D'Souza, Director SJIM, to extend a very warm welcome to all our and also seated and all our students. Conclaves are good platforms for us to learn. So I'm sure you'll be benefited at least by one particular point from each of the four speakers, and you'll make it even more enriching through your question and answer sessions. Welcome to everybody. And I'm extending my New Year greetings and Christmas greetings to one and all of you. Thank you.
Thank you, sir. I request all the dignitaries to kindly occupy the first row down. Thank you.
Thank you, dignitaries. The Finance Club of SJIM conducts various activities such as regular club meetings, guest lectures, and involving students to enlighten them on various financial concepts and providing them with the substance of the financial world. May I now request Mr. Arif to present an overview of the capital markets, which will act as a precursor to a conclave. We welcome you on stage, Arif.
A very good afternoon to one and all. The topic for today is changing dynamics of capital market. But before we get into the topic, today I'm here to introduce you to capital markets. So what is capital market? It is a market where corporates, entrepreneurs, and government raise capital by issuing equity shares, bonds, government securities, and debentures. The sole purpose of capital market is to basically mobilize capital by immobilizing savings and channelizing these funds into various investments like financial assets in equity market and debt market. And it provides liquidity, it provides cash flow, it shifts money from the savers of the economy to the borrowers of the economy, which is used for investments in various assets, which in turn leads to growth and development of the economy. It facilitates capital formation for economic growth and development. It includes primary and secondary market. Primary market deals with IPOs and FPOs. IPOs and FPOs are basically those shares which are newly issued to the investors, which are for the first time, which is coming into the stock market. So once it's issued in the primary market, it is subscribed and allocated by various players, which is qualified institutional buyers, HNIs, which is the high net worth individuals, and the retail investors like us. Once these are allocated, then they are sold and traded in the secondary market, which is nothing but the National Stock Exchange and the Bombay Stock Exchange.
ಹೋಗ್ತಿಲ್ಲ ನೆಕ್ಸ್ಟ್ ನೀನೇ ಹೋಗು. Previous.
So who are the participants in the capital market? like I mentioned, corporates, entrepreneurs, and governments, they raise the funds. But why do they raise funds? Corporates and entrepreneurs, they raise funds to expand their businesses, to merge with other companies, or to acquire other companies. So they come up with IPOs and FPOs, which gives the investors a share of the company, and in return, the corporates buy capital from these retail investors and financial institutions. Government raise capital for various purposes, like infrastructural projects, like metro, railways, and highways. So they issue debentures or government securities to raise funds. And investors in return look for certain amount or certain percentage of profits or interest. Then we have sellers of capital market. Who are sellers? The ones which are ready to part with their money for certain amount of returns. So foreign institutional investors, domestic institutional investors, and the retail investors. Institutional investors are nothing but mutual fund houses, insurance companies, hedge funds, pension funds. The foreign companies are those companies which are based outside Indian boundaries, and domestic institutional investors are those companies which are in India, which is based in India. We have intermediaries like stock exchanges. These facilitate the buying and selling of shares. The most popular stock exchanges in India are the BSE and the NSE. Banks help in liquidity and cash flow of money from capital from sellers of capital to the buyers of capital. Brokers have done a fantastic job in the recent years because they have created great interfaces which allows retail investors to invest in any shares or stocks which is trading in the capital market. Investment bankers also play a very important role as they are the ones who help corporates and governments to raise funds for whatever purpose they need. Credit agencies are those agencies which rate the stocks and the bonds, which helps investors to know which are the financial instruments which are good and have good returns and have less risk, and also enables the companies to get a good reputation in the market if they have a good rating. Registrar and transfer agents are basically institutions which maintain a record of change in equity shares. Suppose I'm holding a share of Reliance today and tomorrow I wish to sell it. When I sell it, the ownership of that share changes to another person, the buyer of the Reliance share. So they are the ones who keep a record of these, and they are also responsible for distribution of dividends as they have all the information who owns how much shares. Depository participants are the most famous depository participants are CDSL and NSDL, which holds all the certificates of shares that are trading in the equity market, Indian market, in an electronic form in one place. Of course, the regulators are the Security Exchange Board of India and the Ministry of Finance. Investment bankers. These are the best investment bankers in the world. We have JP Morgan, which is having a market share of 7.2%. We have Morgan Stanley, which has 6.5% market share. So these are the players who are leading the market in investment banking, and they help companies to raise funds. As you can see, from 2010, they have increased their fees, banking fees, from $80 billion to $127 billion. This is because of the growth in the capital market. They have an advantage to charge higher fees over the years. Some of the recent IPOs that we have seen, in fact, this year we have had almost 1 lakh crore. India has raised almost more than 1 lakh crore rupees via IPO. And there are various companies who have raised IPOs. One of the biggest IPO that came up was OnePlus, 197 Communication. They are no one but Paytm. They had valued their shares very high. They aimed at raising $2.46 billion, but because the investors felt that the valuations are too high. The listing gains were not that much. In fact, it gave a loss of 40% to the investors. Whereas we had also seen some blockbuster IPOs like Nika, like Zomato, which have raised really good money, and they were very successful and have also given good returns to the investors. We have Sigachi Industries, which has given 133% return. We have Latent View Analytics, which has given 171% return. So I'm sure the speakers will be speaking more on the IPOs and will be giving us more information regarding that.
Next.
Nifty 50. Nifty 50 is nothing but a bag of quality stocks, which is well diversified into various sectors, which actually portrays it acts as a barometer for the Indian economy and also portrays the future expectations of the market. I'm sure the speakers will be giving us more information and giving us more light on these topics. So without further ado, I hand over the stage to the speakers in the house. Thank you.
Thank you, Ari. It's time that we begin the Finance Conclave 2021 with our first keynote speaker of the day, Mr. Pawan Morgoth. A brief intro about Mr. Pawan Morgoth. He is a senior manager at Straight Street Global Advisors, Bangalore. He has also been a part of Goldman Sachs Asset Management as a portfolio control and analysis expert. His previous work experience includes being a market analyst in BI department for Thomson Reuters. He is an asset management professional with an experience in risk and control assessment, client onboarding, and revenue management. We welcome you, sir, on the stage. Thank you.
Pawan Morgoth.
Thank you all. Thanks for the brief introduction. Good afternoon, and hope you're all doing well. I'm here to talk about asset management industry as such, and also about the onboarding process and the client billing process, right? So let me first start off with the onboarding, the asset management process, right? Can we go to the next slide, please? Yeah. So asset management, as we all know, that it's basically managing clients' money with an intention to grow the money and also make exponential returns, right, over a period of time, right? With that, what happens is the client money grows, and at the same time, your returns will also grow, and then the client, whatever returns have been made, for that, there's a fee being paid to the asset manager, right? And at the same time, what is another role of asset manager is to ensure that the client's assets have been safeguarded, right? And what do I mean by that is that you will have to have a proper risk management approach to the assets which we have, right? To ensure that there are not much of losses and any dip in the market, we are well covered, right? So that's a primary responsibility of the asset manager, right? Uh, Asset manager as such plays an important role in boosting the capital markets, right? Uh, when the asset manager onboards a client onto their system, they would receive a sum of money, X amount of money, right? Now, then the next role of the asset manager is to ensure that he will have to invest them into different portfolios or different asset classes. Now, the asset classes what we have or what the asset manager is going to invest into there are four types, right? The first one being the stocks, right, which is basically your blue chip funds, the shares, the large cap or the small cap shares, right? And then comes the bonds, which are usually the ones which are issued by governments and as well as the corporates. And then the third type is the commodities. Now, commodities could be your gold, silver, oil, coffee, etc. And the last one, which is available for the asset manager to invest, is the alternative investments, right? Which is the hedge funds, venture capital, right? And also the what do you say, the Yeah, and the private equity also is one of them, right? So these are the four types which the asset manager can utilize to make the investments into, right? And stop me in between if I'm going too fast, or if you have any questions, please raise your hand. And talking about the structure of how the asset management industries or the firms are usually built upon, right? So there are three primary teams I would like to call, right, which would kind of build the asset management firm. So the first one being the investment research team. Now, this team is basically consisting of, say, the portfolio managers. Uh, you'll have the research analysts, and you'll have the traders. Now, their primary responsibility is to kind of conduct some research on the financial market, like build some trends to understand how the markets are going to perform, and also based on these analysis which has been done, enable the traders to take a timely investment decisions. So this happens to be a core role of the investment research team. Right now, this happens to be a team also which is kind of responsible for carrying out all the analytical. So what you have been studying in your courses, right? Different kind of analytical tools to assess the way the funds have been performing, right? So those are the things which are usually being used by the portfolio managers and investment risk analysts, right? And the second team, which we call it as a client-facing team. Now, this team is basically like a front-end team who will interact with clients, which will usually involve the salespeople and the relationship managers, right? Now, their primary responsibility is to ensure that they get new clients to the manager, and also ensure that the existing clients are being retained, and at the same time grow their assets. So that happens to be their, it's more of a relationship building activity, like the way you have your, for your personal investments also, like how you have your relationship manager, it's very similar to that. They would manage your entire portfolio, right? And the last team is a support team, right? Now this team basically is a support for the above two functions, which is investment research and the client facing team, right? Now that's about the structure, right? Now talking about the way the asset managers manage the money, right? Clients' money. So there are two types. One is the active asset management services, right? And what does this mean? Is basically the portfolio manager here is heavily involved in the success of the investments going up, right? By the way of conducting analysis, what I mentioned earlier, right? The conduct a deep dive into how the markets are going to perform, do the trending, understand where to invest. So he'll be continuously looking out for changing the way the fund has been structured, right? Look out to rebalance the portfolio so that you have the top performing stocks in your, or securities in your portfolio, so that it gives us an optimal result, right? So what does that mean to asset manager or to the client, right? So it means for the asset manager, I would say it is a more of flexible working for the person who is managing the asset, right? So he's got all the liberty to kind of explore and find out the best possible ways to increase the value of the portfolio. And at the same time, for the client, since the manager is giving so much of time and effort to this, there's a higher fees also involved for a manager to be paid, right? And the second one, what we have is known as a passive investment strategy. Now, this is an exact opposite to your active one, wherein the manager is not basically involved into what do you say, continuously revamping of the funds. He'll be more required to look at the funds once in a while, as the funds, when he onboards them, he would link it to an index or to a fixed strategy, right? The way the index goes up and down, even your portfolio would kind of fluctuate, and that would kind of be less involvement of asset manager. And also what would happen for the client is the client would end up paying a lesser fees to the manager, because his involvement is not to that extent when it comes to an active manager, right? Now, considering the recent conditions, how we are going through the COVID and everything, the way the markets have been performing, right? Uh, More and more people are moving towards passive than active, because it's very difficult for an active manager to beat the benchmark and make some revenue, earn some extra fees on that, right? So people tend to move towards the passive way of managing the assets, right? And when the markets are up and then there's a lot of scope for flexibility, they would opt for an active manager, right? Uh, Talking about how does for all the services which the asset managers performs, right, for the client, how does a manager earns any fees, right? The fees what has been paid is two types, right? One is called as a fixed fees, right, wherein you would charge the asset manager, charge the client on a fixed percentage of asset under management, right? There will be set percentage, and all of these details will be covered in an agreement, right, which is like a legal binding between the client and the manager himself. So that would kind of give details on what should be the fees. On top of this, there is one more fees which is called as a variable fees or performance-based fees, right? Now, this is applicable only when the fund which the client is invested in or the manager is invested in, it meets the targets or exceeds the targets, or you can call as exceeds the benchmark returns, right? That is when the portfolio would, the client is, the manager is entitled to receive a performance fees, right? These are the two kinds of fees which usually a asset manager would get it from the client, right? Now, moving on to the next one, like what kind of asset management companies do we see, right? Now, how are they structured, right? Now, there are two types. One is core business, or we would call it as pure play. What does that mean is when the company is called as pure play or a core business, its core business model is basically asset management services. It's based on the asset management model. It is not conducting any other services apart from asset management, right? For example, we have companies like Fidelity, Vanguard, BlackRock, who are primarily into doing asset management. Then we have another type of companies wherein the asset management happens to be a division in the bigger firm, right? The investment banking firm, right? There are other divisions like sales, trading, investment banking, right? And asset management happens to be a division, right? Now examples of these are like Goldman Sachs, State Street. We have JP Morgan. All of these companies carry out asset management as one of the extended arm to their services, right? Now, last but not the least, we're coming to the clients. Now, the clients are different types to which the asset management caters. The first is the institutional clients, right, which are basically all the pension funds, mutual funds, insurance companies, and then we have these corporate clients as well, the bigger firms who would like to invest with the asset manager, right? So that is the brief on the asset management process, right? I'll move on to the next slide before, which is on the client onboarding process and on the what do you say, the billing process, right? Any questions so far on what I have explained, or happy to take it at the end of the session as well? Oh, fine. Next slide. So what I have put here on this slide is basically talking about how does a client, so talking about how the asset manager onboards a client onto their system, right? Now, when we look at the process, there are three steps here. The first step is the contract negotiation and sign off, right? And the next step is the client onboarding, and the final step is the invoicing or billing and the account receivables, right? Now, talking about the first step, which is the contract negotiation and sign off. Now, this is where the client facing teams like the sales team and the relationship manager play an important role in carrying out this activity, right? Now, what happens is the client comes on board and says that he has X amount of money to invest into, right? And he would approach all the asset managers in the world, right? Like Goldman Sachs, State Street, and everyone would then come up with something called as request for proposal, right? That is like a draft agreement which goes out to the client. So what does it entail? It entails basically the terms and conditions on, or basically like a do's and don'ts, right? Which markets the client is going to be invested into, right? And what are the regulated requirements under those markets, and how will the trading happen, how will the reporting be considered, and how will it be produced to the clients, right? How often will the reporting be done, And finally, the part which I am related to more is the billing piece or the revenue management. It talks about the fee schedule or the rates and how frequently we are going to charge the client. Will all be put into that document when we send it out to the client. Now, that is basically like a draft agreement. Now, multiple teams are involved here, including the revenue management team, the legal team, right, the compliance, the different the support team which I spoke about earlier, right? These are those teams who are basically part of uh, preparing this draft agreement and sending it out to the client. So once the client receives, he will receive agreements from different companies as well, like Goldman Sachs and State Street, right? And the client would then go ahead and review the agreement, and he would select the ones which is more applicable to him or to his strategies, right? And then he would then go ahead and invest. The client will have their own investment needs as well, their risk appetite. Based on that, it will look at the request for proposal. It will understand whether these conditions are fine, are they in line with their existing asset managers services which they have been providing, and then give that go ahead. So once the go ahead is given back to the manager, then the manager accepts that. The next step would be signing off of those documents, which will kind of legalize it will be like a legal binding between both the parties that we have to follow whatever is written in this document in order to carry out the normal course of action, right? Now, what if when the agreement goes to the client and the client is not happy with certain conditions, right? The client usually comes back saying, I can cite from my experience, we have seen client coming back to us that they do not agree to the methods which we use to charge the client. They do not agree with the frequency. We would then take it back. We would look at the reason why it is being given back to us with the changes, and we look at our process, understand whether we can adhere to that, and then consult with the legal, and then give our sign off as well. And then eventually, again, the document gets signed by both the parties, and then it is circulated to the respective team. Now, this is where the job of the client-facing team, which is sales and the what do you say, the remediation, the relationship manager, kind of takes a pause, right? And it will be then handed over to all the support team. Now, support team are, as I said, all the different teams who are responsible for onboarding the client onto their different platforms. They would receive a signed agreement. So that's the next step in the client onboarding process, right? Wherein they receive the agreement, signed agreement, they will have to first do. I'm talking about the billing part. They look at the process in what do you say, how the client is being set up, what are the requests, like what is the fee schedule, terms and conditions, and then they will decode that and then onboard them onto the billing platform. And then the next step would be, once it is onboarded, right, we would also do a risk classification of that. Now, why do we need to do that? We need to understand, when we onboard a particular client, right, are those clients standard in nature or those non-standard? Because standard clients, when I say standard from the way they are set up, it will help the manager to deliver it faster, deliver it accurately, right, and less number of queries, right, as compared to the complicated ones, right. So that's the reason why we need to do the risk classification of the contract. And finally, we have the last step, which is the billing and the accounts receivable. Now, this is where it's the last stage of the process, wherein everything is set up. Now, the billing team or the revenue management team has to carry out the what do you call the billing of that and ensure that we prepare the invoice, send it to the client, and then based on the invoice going out, if there will be any inquiries, we address those inquiries and clarify the doubts. And finally, we work with the AR team, which is the account receivable. So when we send out the invoice, we also expect payment. And in those cases, we would help out the AR team to receive the money and on time, and then close our age receivables as well, right? So that's the brief about the asset management process and onboarding and revenue management uh, piece, right? Any questions, or do we have it at the end? Okay, great. So thanks a lot. I thank the institute for giving me this opportunity, right, to come in front of you and share my experience and the knowledge what I have. And thank you once again. Thank you.
Thank you, sir, for giving us such a deep insight on asset management. It's time to welcome the next speaker of the day. He's none other than Mr. Murli Menon. He has over 3 decades of senior leadership experience in directing full spectrum sourcing, processing, warehousing, and trading of a wide range of commodities that deliver PL growth. He is well versed in areas of strategic planning, operations management, talent placement, and workforce transformation, coupled with an eye in identifying and tapping new opportunities. He is known as a decisive and tactful professional with strong multitasking capabilities in overseeing operational and commercial functions. He also possesses strong entrepreneurial acumen in setting up new enterprises demonstrated by an early online discount business in marketing FMCG products. He was the regional head of coffee for Asia with Louis Dreyfus Company Asia Limited, responsible for sourcing, processing, and warehousing of various coffee varieties, including across Vietnam, Indonesia, India, as well as China. To give back to the society at present, he is busy with helping Adivasis in various ways, including training them and helping them to market some of the products manufactured by them. We welcome you on stage, sir.
Don't show it to this thing. You're showing it to the speakers, no wonder.
Hello. Yeah, good afternoon, everyone. Thank you so much for the very warm welcome. I'm not too sure whether I did all that was mentioned there, but I did a few of those things. Today, the topic that I want to sort of present to you all is something on commodities trading. I just want to understand how many of you have. This is interfering. This is just, I don't know if it's causing me echo. Yes, right. How many of you have actually done any trading in your lives? Be it stocks, doing anything of that kind? Fantastic. We have 3, 4, 5, 6. Okay. What mostly have you traded? Sorry? Bank, FT, stocks? Sorry? F&O. Wow. Tremendous. Okay, that's nice. So at least we have a few in the room who understand what trading is. So has anyone understood what commodities trading is? Do you think it's all about just trading on the futures, or is it actually physical product too? And can anyone just sort of tell me what do you understand by commodity? What's commodity? Anyone? What's a commodity? What's in your mind is commodities? Sorry? Okay, very good. Okay. I mean, I'm not asking for examples. I'm just saying, what do you think is a commodity? Okay, so essentially, what is commodities? Commodities is almost anything that we use on a daily basis regularly, right? I mean, even the clothes that you wear come from what? Cotton, soap, all that is raw materials that go into that. The food that you eat, the mobile phone you carry has lots of metals in it, and endlessly. So, almost on a daily basis, we are all in constant touch with commodities in some shape or form. And the most easy one that anyone understands is what? Food, right? You need to have food on You,
What did you do?
can you still hear me? Yes. Maybe I'm better off without the mic, huh? So, I just classified all the different commodities for you all just to understand that, we have, of course, metals, which is gold, silver, copper, iron ore, and the like. Yeah. Then you have agriculture products like wheat, corn, rice, sugar, coffee, cocoa, and the like. So it's endless, right? You have a number of products. There again, you have also all your vegetables, and everything is also part of a commodity, right? It comes from there. Then you have energy, which is, basics like crude oil, natural gas, electricity for that matter is also an energy product. And then you have also livestock and meat products, which happen. That is, you have cattle, you have pork, you have eggs, and the like. You can have any number of products. So, when I, of course, talk about commodities, it has both. I just thought, I'll just bring up the different types of commodity exchanges that exist in India. But frankly speaking, what I want you to understand is that the essence of commodity trading is all about physical commodity trading. If you just do futures trading, you're not going to get the food on your table very easily, right? I mean, there has to be someone in between to do his job of buying it out of a farmer, bringing it to the market, selling it to the end consumer in some shape or form, either by a raw material or it is a processed product that comes on your table. The futures exchanges or the commodities exchange is only basically giving you a risk management tool, and it is also a last, what you might say, a last resort of any kind. That's what it's generally meant as a commodities exchange. So what we have in India is, of course, you have the three main ones that are there. That is NCDX, MCX, and then the Indian Commodity Exchange. Does anyone know who got bought over by the Indian Commodity Exchange? There was also one called NMC, which got subsumed by the Indian Commodity Exchange. So you generally have three today. And the Indian Commodity Exchanges have its own dynamics. That it's not, most often it's not easy to trade these products on these commodity exchanges. Can you tell me, anyone thinking about it, what could be the main reasons? At least something that came very recently, 3 days ago in the papers. If all of you have been reading the Economic Times, Business Standard, and whatever. Correct. So the Indian, what you call the government regulation isn't fair, right? I mean, you go there and trade a product, you basically are long or short. Do you guys understand what's long and short at least? So you're either long or short, and then suddenly the government says, sorry, no. You have a strategy in mind, you basically decided that this is a place that I want to make the money. But on that particular day, you're basically not making money, you're probably losing money in a lot of ways, and you still want to have some time. But the government says, no, sorry. I'm putting a halt on all trades. This is the last trade that can happen on this thing. And from now onwards, no more futures contracts for the next 1 year. 7 products, those are products which are, on regularly traded. Wheat, paddy, soybean oil, palm oil, all of them are, extremely important products. So that's why India has its own challenges in the commodity exchange. The world, these large commodity exchanges across the world are some of the main ones that I've listed here. Is the New York Mercantile NYMEX, the London Metal Exchange, LME. You would have seen the Euronext Life is Euronext. And then you have the CBOT, that's the Chicago Board of Trade, the Tokyo Commodity Exchange, and the CME, which is the Chicago Mercantile Exchange. And each of these exchanges will trade different types of products. So they'll have their own contracts for it. And so you can only trade depending on what you're interested in on some of these exchanges. Not all of them offer the entire range of products for you. So, I thought I will just sort of go through some trading terms for you all, which might just sort of a bit excite you, primarily because it's you're all probably more interested on the future side, and of course, it also has a relation with the on the physical side of things. I mean, before I go on to that, the important thing about a commodity trading side is, as different from a stock of bonds, is what? Can anyone tell me what exactly does it, what does it offer you? Anyone? The physical side. I'm talking about the physical side. When you buy a stock, what do you get? If you buy a stock of Reliance Industries, and that's if they're making money, of course, yeah. But what do you get? You get a stock certificate, which in the old days was a paper, and now it's a electronic form. So what are you owning out of it? You're owning only a kind of a tiny portion of it, right? You're having one share, 10 shares, maybe 1,000, maybe a few lakhs, I don't know, whatever it is. But it's all something that is there, and then you can't see it on a physical basis because you don't go and see and sit in Reliance Industries to see what they're doing on a daily basis. When you trade a commodity like a rice, wheat, corn, sugar, rye, anything, you're basically seeing and feeling that commodity all the time, whatever you own, correct? If I buy even 10 tons, I mean, from at home, when you go and buy 5 kgs of rice to bring back home, your mother or you yourself are always feeling it, seeing, hey, does this look good? Does this not look good? Making an assessment of it. Then making a decision, should I buy this or not there? And the other one, you're basically going by just certain amount of financial information that is there out there on a regular basis, because they're forced to basically give you that information in that form. So let's go over a few trading terms, because just to give you all some excitement. Anyone who knows what's an open interest on the future side? Since someone mentioned that they trade F&O, what's open interest?
The number of contracts open.
Very good, yeah. So does that include both these buy and sell, or?
Yeah. So there's a buyer and a seller which is open in that contract. Unless that contract does not close, the open interest won't be given.
So you don't add it twice, but it's an open contract because on any exchange, when there's a buyer, there has to be a seller. You can't just simply go and buy something when there's no seller, right? Or the other way around. So that's very good. So that's the open interest on any. Why do you need to have open interest? You need to know how much liquidity is in the market. What's the interest in this contract? How many people are really buying and selling this contract? So for you to understand, is there some amount of liquidity? If it's very tiny, if there are only 10 people doing it, let's call it 10 open contracts, would you be able to go and buy 100 lots? You can't, right? Because there's only that many small percentage of people trying to trade that. So it's always important for you to understand what the open interest in that contract is. Next is basis trading. Anyone understand what is basis trading? Or what is meant by basis?
The difference between the spot and future.
Very good, yeah. So that's the actual difference between the spot price and the futures price. That's what is basis. What is basis trading is all about trying to determine how that difference is going to move in relationship to the futures price. That's what you will be constantly trading. Because the moment you basically, I went through a class with the seniors, and so it sort of was more easily able to explain to them how you lock in a basis, and how you buy a physical product and lock in a basis. And that's when you just sort of trade the basis. That means you keep on understanding what the relationship between the spot price and the futures price. What generally happens in a very perfect futures market is that towards the end of a futures contract, the spot and the futures must converge. But that is very rare. It's a very, very perfect environment. Normally, most of these markets are not very perfect. So you'll always have a disparity. Anyone understand what's a carry market? It's also called a contago. Sorry? No. No. You don't understand what's a futures market, right? A futures market is what? It's giving you several prices in the future. So let's say you're trading now, you have a January, I mean, I'm just going to use some hypothetical thing that you have January, February, March, April, May, correct? So, the exchange is offering you a contract for each. So what will happen is when you say a contract, it's a Jan contract, a February contract, a March contract, an April contract. And there are people buying all these contracts, buying or selling, right? You have, as I said, when you buy, there has to be a seller on the other side. And so when you say what is in a carry market, what it means is that the price in the future is more than the price at the nearby. That means the February futures market should be higher than your January futures. And so also March should be higher than Feb. The April should be higher than the March. So that's called what is called as a carry market. That means what it's trying to tell you is that we will pay you to carry the product. Someone on the other side is telling you, I will buy your product in March, but I'll pay you more than what I can pay you today in January. And that is why it's called as a carry market or a contago. That's why it's called a carry, right? They are paying you to carry it. They're asking you to hold on to it, and I'll pay you more in March. Do you understand what is the reason why you will hold on to it as compared to selling it today? Anyone? You have all the money. Let's say you have all the money. Don't worry about the money. You're not in a hurry to sell. You're not like, just assume that you have a rich father or a father-in-law who gives you a lot of money. And you have enough money. So why would you hold it back? No. In a way, you will hold it only because, what is called, that's why it's a cash and carry. That means, your cost of carrying needs to be less. There are costs involved in carrying it. That means, let's say it's not a free money when I say you buy, they're giving it to you at an interest cost. There's a cost for the warehouse and things like that. So you will calculate and say, how much does it cost me to carry it all the way up to March? And then the March price is much better than all that. Why not? No, you'll make an extra 5 rupees, 10 rupees, whatever it is. Yeah? Then only you will basically carry. So that's when, that's called a cash and carry strategy. So very cash-rich commodities companies have a phenomenal advantage because they get capital at a very much cheaper price than compared to you and me. So what they would do is, this is like a no-brainer strategy. Because if I can carry that product far cheaper than what the carry in the market is, I'll do it all day long, right? I don't need to do anything more. All I need to do is hold the product, and I go on, selling it only in the future, because that's so easy profitability that the market is offering you. That's called it's in full and extended carry. That means, it's giving you more than what the cost of carry is. And the other one is in backwardation. So what is backwardation? Where the spot price or the nearby month, is higher than the forward month. So the market is telling you, I'm not willing to pay you anything to hold this product because I want the product today. I don't have the product with me and I want it today. I don't want it in the future. So if you give me the product today in January, I'll pay you more than what I can pay you in March. Anyone? Am I going too fast? Is there some things that people don't understand fully? Have anyone seen how these futures markets operate, at least on a screen at least? Yes? Spread trading, so what is spread trading? Spread trading is that I buy the Jan, I sell the Feb, and I do the same for other months. And I can have a reverse strategy depending on where I see the spread moving. So that means, I constantly keep an analysis on where the spread between the Jan Feb is, or the Feb March is, or the March April is, and then accordingly build a strategy around that. So all I have to do is constantly, when it sort of widens, I can basically reverse my trade. I can buy Jan and sell Feb first, and then depending on the spread strategy, I basically reverse it so that I close out my position. I basically buy back Feb and sell January. But these are all on the basis that you have to do all this before the contract expires. Arbitrage.
Buying in one market, selling it in the other market.
Very good. What's the simplest that you know here in India? Call it stocks. If it gives you all the opportunity to do it. Very good. That's an arbitrage. Why does it happen? Because of certain fluctuations in the thing, and the delivery period, the liquidity in the market on BSE versus NSE, number of reasons. So, if that gives you a thing, if that gives you all the time, it gives you an opportunity, what would you do? All day you'll do that. Why? Because it's a no-brainer. You can just buy a thing and give you an NSE and then say, okay, I'll do this arbitrage strategy, right? You'll use arbitrage for when it gives you money, and there are also trading strategies around. What's M2M? Anyone to explain that? What would you do? What does the mark-to-market mean? Anyone understands that enough?
So the profits and losses made by the bank has to be paid or has to be paid to the broker. Suppose I'm in a futures contract and I have a loss of 5K. So I have to act as 5K so that the other person who's the seller of the futures gets that 5,000. Because in futures and options, it's mark to market. So basically the funds are transferred each and every day.
The difference, that sounds the difference. So you're partly right and partly yeah. So the way it works is that if you have a position on the futures market, one is to help the exchange, as you said rightly, that you need to basically pay up or receive money. If you're essentially losing, you need to pay the difference. That how the mark to market is calculated is you have a position on the market, and every day when the market closes, the closing price is used to determine whether you are making money or losing money. If you're making money, the exchange pays you that much. If you're losing money, you need to pay back. Now, you and me are not directly members of the exchange. So often what we do is we have to use a broker in between who is a member of the exchange. And the broker is the one who is completely responsible for those positions that you, me, and the rest of us all will trade through that broker. You understand? What else does it do? It's always telling you also, are you basically making money or losing money on a daily basis? And there is in the larger world, when you work with large companies, you can also do the same thing when you're actually trading on your own. But in large companies, what happens is that when you have large number of traders, the company allocates what is called as a VAR. Do you know what is a VAR? VAR. It's called value at risk. That means, what the company is telling the trader is, the company is willing to put a certain amount of money on you as a trader as a value at risk. That means the company will be willing to lose that much money if they max. So let's say it's 1 crore rupees. I'm just giving some random numbers here. Then when the moment your mark to market, goes at over 1 crore rupees of loss, the company boss will say, cut the position. That means you have to cut the position at that point, even if you are very much willing to do. So we have had number of times when we have pretty certain that our position is great. We needed a bit more time, but the market didn't favor us. The company management will say, cut the position. So what it means is that you cut your losses and live to fight another day. That's what it means. And generally, most very well-run companies will not give you any leeway on those things, because the moment they do, then the other guy goes a little more berserk and then it goes. So that's called value at risk. The company will put a value at risk on you. The same thing you can do personally, right? Very much personally, when you trade, you must understand always how much money are you willing to lose on it. And on that day, cut it, cut the loss, and then get back and say, I'll fight another day. A very good trader is always like that. He always will try to cut his losses and then try to find another day. That's what it is. I traded. Oh yeah. So I'll just. I traded coffee for the longest time. So I'm just going to show you a few charts in coffee. Go through few numbers in coffee, just to give you all a bit of excitement there. So the first chart is actually indicating what is called as a composite indicated daily price. You know what a composite daily price is actually? Composite is basically something like a weighted average of number of sections that they put in things. So in coffee we have 4 different groupings of coffee, and they kind of do a weighted average of it based on the weighted average of the total volumes that are traded on the market. And that's what will comprise the composite index. And that's just showing you how the chart has been behaving. On the bottom there is showing you what an arbitrage looks like between 2 different exchanges, just like BSE and NSE in India on the stock. In coffee, we have both the London and the New York exchange. So it's just telling you what the arbitrage between the 2 exchanges have been. That means what's the price spread between the 2. In the case of a commodity like coffee, unfortunately, I can only trade the arbitrage, but not by buying here and delivering there, because there are 2 different types of coffees being traded. But we always try to understand. We always try to look at what the arbitrage is, just to see how people will switch between different grades of coffee. So that's what it means. That's what we do on the arbitrage there. Not really buying here and selling there, but the arbitrage will start to tell us how the consumer will start switching around, and that's how you will start looking at it. So I'm told to wind up quickly. I'm going to go over this next slide quickly. And so coffee statistics, how you've got to understand, when you trade any commodity, what is normally the way in which that commodity is measured and what is understood across the world. In coffee, everything is measured in what is called as million bags. That means it's not really in tons, but essentially we like to call it all in millions of bags. And each bag is 60 kilogram is 1 bag of coffee. That's what they would do. So, we have total production of coffee in the world is about today, roughly, where 2020, 2021 is about 169 million bags. And out of that, Arabica is about 100 million and Robusta is about 69. There are 2 distinct varieties of coffee. One is the Arabica, which gives you the flavor. Robusta is something which is used more in your instant coffee manufacturing. So, that's what it goes into instant coffee. The consumption worldwide, 2020, 2021, is about 167 million bags. And so what you can see is we don't have too much of a gap between production and consumption. When you trade a product, we understand in the stock markets is someone else presenting you a balance sheet. In commodity trading, we also trade a balance sheet always. What kind of balance sheet? It's a supply-demand balance sheet. And that is something that, if you want to trade a commodity in a proper way, you must live and breathe that balance sheet. Why? Because of various things that are happening in the world, whether it's weather related, whether it is something to do with new regulation in the country, which says no more export of coffee from here. Lots of things that will certainly squeeze the supply, and then you have demand. How do you meet it? So that's where you understand how these price movements will happen. Indian production is only about 5.7 million bags. That's very minuscule. So we are less than 5% of the world production today. We are hardly 3.5% or something like 3.5%, 4%. So and I just thought I'll end the slide by saying, well, I don't do any more commodities trading, nothing on the futures, nothing, but this is what I do. I do most of my own. I try and do something on the other side. I'm a farmer, or I'm trying to be a farmer, digging my way through. That's the thing that I wanted to end with. Thank you all, and if there's any questions, I guess it's in the end. Right? Thank you.
Thank you, sir, for giving us your insight in commodities from your vast experience. Moving on to our next speaker of the day, Dr. Alok Charger, who is currently the Learning and Development Consultant at Dwara Money, Bangalore, and also the founder and chief financial officer at alreadylate.com, which is an entrepreneurial venture towards achieving the vision of spreading financial literacy in India. His interest lies in simplifying personal finance concepts and enables individuals to make informed investment decisions. We welcome you, sir.
Very good afternoon to Reverend Father, good afternoon to Dean sir, co-panelists today, Ashwin sir, and all our faculties and beloved students. Well, it's taken me 17 years to graduate from there to here. So 2004 is when I passed out of SJCBA, which today is known as SJIM, which is something he missed, most important part of my introduction. So yeah, it's already there. So I thought, let's talk about disruption in capital markets, and we cannot talk disruption without fintech. And to just give you an example about how our normal lives get disrupted without we knowing anything. The last 15 odd days, I have been coughing vigorously. My kids were coughing vigorously, and this happened after I attended a mass wedding. And 2 years back, viral infection was a scare. Today, I was thanking, and everybody around me was thanking that it was only a viral scare. COVID has disrupted our lives. So that's disruption for you, and disruption is there everywhere. So today I'm here to talk about some examples and some technologies which are disrupting our lives in the capital markets. So hoping the next 20 minutes would be informative, educational. Moving on to the first slide. So why do we need fintech? So just a few points on the need for fintech as such. The industry is expanding. I think Arif, if I'm getting the name right, gave a wonderful introduction. Is he around still? Lovely job there. I really like the confidence and the quality of the content. But I could not even stand here when I was in my school days. I used to shiver. Right now also there are some butterflies which are still flying around. So the industry is expanding. He gave us a long list of IPO, and he was not kind of disturbed when he saw, okay, Nika, I'm talking about Nika. Nika is not on the slide. It did not disturb him. So lovely there. So the IPO market, whether it's investment banking, and I am sure with SJIM students, you guys are well read. So you know, the last 1 year, we have seen the maximum number of demat accounts getting opened. And very recently, we had a big industry saying, no, we have more people investing in cryptocurrencies than stock market. So the industry is expanding. And whether we like it or no, the only way we can match up with this industry is by using technology. So either you innovate or you become irrelevant. There's no other way. And this applies to you guys also. Either you innovate or you become irrelevant. 5 years down the line, the job you're thinking about right now might not even exist. So that's the hard reality outside. Why do you think I've suddenly become a fintech specialist? I was not. So I saw an opportunity there. I updated a lot of my knowledge quotient in the last 12 to 18 months because I realized if I do not innovate, I would also become irrelevant. So it's not about competition anymore, it's about collaboration. So entire fintech has changed the way the capital markets were working. So earlier brokers were competing with each other. Brokers were competing with banks. Banks were competing with agencies. Everybody was competing with each other. And today we have fintechs coming in, yes, disrupting the space, but creating new business models where multiple brokers can work with one fintech on one single platform. I'll share some examples in the future in the next few minutes. So collaboration is the word, competition is out. You collaborate, that's why we need fintech. So some reasons why we need fintech. Can we move to the next slide? So I don't know if it's visible. Sorry, I could not enlarge it even bigger than this because the PPT landscape was not allowing it. But if I were to just highlight a few things, we have one very significant thing which I'm sure everybody knows about is today blockchain. And we have digital transformation, we have advanced analytics, where we talk about predictive analytics and so on. We have smart contracts, we have robotic process automations, we have IoT. How many of you have heard any of these terms? So what terms have you heard? If you can just tell me, have you heard all the terms? Very common. So I'm sure you guys have come across also these in your real life. So I'll try to keep examples also very simple. So talking about technologies, I'll highlight 3 or 4 of them here. I'll not invest too much of my time into all technologies. First of all, obvious is a blockchain. We all understand what a blockchain is. How many of us trade in crypto? It's a bad question to ask. So you have people here? 1, 2, and how many of you understand crypto? That we don't do. How many of us understand what Bitcoin is? Half a hand is there. I know a little bit. Okay, that's one hand. So what exactly is Bitcoin, my dear friend here? It's a cryptocurrency. Blockchain technology, very good. Pardon? Whoever wants can buy it. So what exactly is this blockchain technology? Yeah, I have bad eyes, which you can see. I also have bad ears, which you don't know. Yeah, there, somebody. Why is it? What is so special about it that you cannot hack it? Some corner extreme from there. Decentralized. So, can you just explain a little bit because we are getting there. The answers are all here. I'm just trying to collect because I saw no collaborate. I'm just trying to collaborate here. Yes, decentralized, encrypted. Very good. Somebody's actually invested a lot of time in learning about blockchain technology. I think she definitely deserves a round of applause. Yes, gentlemen at the back.
Distributed ledger system for end-to-end
Wonderful. Distributed encrypted system for end-to-end communication or transmission of data. Wonderful. Lovely. So we all understand a little bit of blockchain. You do not need to be a techie to understand blockchain. That is what I have realized in the last 1.5 years. I have myself been investing in crypto for the last 5 years, but only in the last 18 months I took some effort to understand blockchain. So yes, the information is decentralized, stored in computers. It could be your own computer at home. It's like you giving out your hard disk space on rent. Why should everything be stored only on one cloud? Whether it belongs to AWS or Microsoft or Google, I don't care, but why should it be at one place? If hacker wants to hack, let him hack everybody's system. And the information is encrypted. Any change inside any block of information in the form of a chain. Any change in any block of information, you will have to update that change in every block in that chain. And such chains are there in everybody's system, whoever is part of that network. So if I have, let's say, 10,000 users, locked in, or 10,000 nodes, node being the technical word for it, 10,000 users providing their system space for rent, and a hacker wants to hack in, he has to hack in not one block in one chain, all the blocks in all the 10,000 chains, because each chain has to be identical for the system to run. And the time taken for this one change in one block is 10 minutes. So if you have 10,000 chains and 10,000 blocks, it's 10,000 into 10,000 minutes. So making it virtually impossible, technically impossible to hack it. So that's the USP of blockchain as a technology. The technology has been there for more than 2 decades. Just that because Bitcoin came in, people started noticing it and noticing the utility of it. Today, in your capital markets, blockchain is the next big thing which is gonna happen. Your user information, your PAN card, your demat account, your mutual fund investments, right now everything is at the mercy of one centralized hacker or one centralized server. So that is what will change the first. So you will see a lot of companies embracing blockchain as a technology across the world. It's already begun. It's a matter of time in India. Maybe it's a race of time whether you guys pass out first or blockchain implementation happens first in the capital markets. I also want to talk about smart contracts here. Now, smart contracts are an extension of blockchain as a technology, wherein we all know contract, right? You all are MBA, PGDM students. First term, you might have had business law as a subject, or maybe second trimester. When do you have it, business law? Second trimester. Oh, some things don't change. So second trimester, we study Indian Contracts Act, right? And the contract is legally enforceable. We cannot change, and the performance has to be there and stuff like that. Exactly the same thing, but the information, instead of being in a piece of paper, can just go into a block. And in case, let's take a simple example of a rent agreement. People who stay in rent have to have a rent agreement. The rent agreement clearly says, I am the landlord, you are the tenant, and this is for 11 months, and every month before the 5th of the month, you will pay me XYZ rent. You will take care of the utility bill payments and all that. And after 11 months, subject to mutual agreement, we can extend the contract. That's how it works. Now, the same contract, the same information, I feed it into a blockchain. So when I say I feed it into a blockchain, it could be one fintech startup somewhere in Kormungla, somewhere in Indranagar working right now, saying, I will digitize all contracts into smart contracts. So that startup is providing the service saying, we give you digital contract facility, wherein enforcing that contract is not your headache, it is my headache. Now I am the landlord. On 5th, you are supposed to make the payment. I do not have to check whether the payment has been made. The contract has access to my account details. It will check whether the payment has been made or not. Now, if the payment is not made, the contract has clearly said, if the payment is not made within 24 hours, we will throw you out of the house. That's what it says. So 5th of the month, rent payment has not happened. 6th of the month, you come to college, you go back to college, you realize the door is partly locked. I did not have to do anything as a landlord. It is automatically locked. You cannot enter the house now. So no question of negotiation, no question of, sir, give me some more time, no question of you trying to evade me when I call. Things become much simpler. Of course, there's a flip side, I'll come to it. That's a smart contract for you, where once you feed the terms and conditions, nobody can change unless the majority of the people in the chain agree to that change. So change will only happen through a consensus, it will otherwise not happen. We also have robotic process automation, one of the most common things which is already there in capital markets. Today, people, I think sir asked how many of you trade. So few of you raised hands. So where are they? I also want you guys as volunteers. People who invest in stock markets or bitcoins, wherever. So you opened account with some stockbroker? Which one? Zerodha, I love you. Who else? The Upstocks also, to Marwadi, any chance? Okay. So Zerodha, Upstocks, Grow, or Hdfc Securities. Now, everybody today is providing you an online account opening facility, wherein you get a link, you enter the details, you upload your documents. At the back end, Earlier, each process was automated, and that has been there for almost 15 years now. The processes have been automated. But data was being fed manually first. Then we had technology where we could read the data. And now, what is happening is every process, whether it is document verification, whether it is checking all the details, what you have provided, checking your bank account, whether it is legit or not, all these were earlier being operated individually and integrated by a manual interface. Today, that manual interface is gone. So your account opening can happen within few hours because of robotics. That is robotic process automation. We have already seen IoT, Internet of Things, when you just go to a restaurant, automatically you get messages based on sensors and all that. The same thing is happening in capital markets. We are using IoT for a lot of research to understand how people trade, how people invest, their environment. We place some sensors to do a lot of capital market research. So not going much into other technologies because I don't want him coming and telling me my time is limited and I need to go. Can we move to the next slide? So where do we use this? Four broad areas which I have highlighted, where all we can use these technologies. First of all, these few seconds are not mine. Operations, as I told you, robotic process, completely operations have been eliminated from any manual intervention. The benefit of this is less errors, higher productivity, because robots don't need biological breaks. Robots will not even ask for salary increments. Robots will not feel the fatigue. That's a direct benefit of having robotics as part of your operations. So almost 50% of the cost banks, stockbrokers have saved by automating these processes. So operations is the natural, it's like low-hanging fruit. Any company which wants to get into adopting technology and say, yes, I am techie, I'm also, embracing technology, the first thing they go for is this because the benefits are easily visible. Compliance, we in the tech industry, especially I've seen startups, they're all ed tech, food tech, this tech. So reg tech is a new term which has come up. Your entire compliance, very often ignored, but very often the most expensive function in any organization, coming for me, is reg tech, which is talking about regulatory compliances. So whether it is anti-money laundering, whether it is third-party account money coming in, whether it is KYC, a lot of times debt people also end up investors. So compliance has been automated today. A lot of your flagging of suspicious trades or market manipulation, whether it is SEBI, whether it is NSE, monitors it using reg tech platforms. So a lot of companies are already providing dedicated compliance technologies. Advisory, at the very basic level, we have a robo advisory coming in wherein how your portfolio should be constructed or what kind of a mutual fund will suit you, whether it is coin from Zerodha, whether it is Scriptbox or whether it is Funds India. Everybody today has some kind of advisory which is automated, where I don't need individual relationship managers or individual financial advisors to talk to people and tell them which product would work the best for them. So you feed in all your data and boom, you have an answer there. So advisory has taken up a lot of technology. We have algorithm trading coming up, so big time. SEBI is also watching it very closely, trying to make it more transparent, wherein if you have a little bit of knowledge on finance and a little bit of knowledge on technology, you can write your own code and strategy. And today stockbrokers are accommodating your strategy into their app. So you can use their app, you can embed your strategy on their app. So they give you access to their API, what we call as. Next, risk management. So I was talking about margin calls, mark to market. So bad days in market, 2 days back, we had a bad day in stock market when markets fell like crazy. So people who have leverage positions where they have borrowed money and invested. Earlier days, I still remember 2008 crash was my first experience of a crash. And the CEO of the company where I worked was involved with risk management. He was sitting there, whoever calls, nahi, sir, aapka maal to katega. Your positions will be squared off. I cannot give you even a single minute more. Today, the CEO doesn't need to worry because systems are in place. Everybody will be treated at par according to the code that you have written. So now, there's no reason to be intimidated by compliance because everybody used to be scared about compliance, but thanks to RegTech, we don't need to be scared about compliance anywhere anymore. No mistakes, no chances of mistakes. Yes, but I have a couple of interesting things here. One, what does it say? Honey, I think we missed the repayment. So this is like that guy who missed paying rent on 5th. Now it could be a genuine reason. Now this is the problem with technology. Technology, at least as we have today, doesn't understand your emotions very well. So it could be a situation of COVID. It could be that his bank password actually got locked down. It could be that he has an account with the PSU bank whose server was down. So very common. So he's not made the payment because he could not make the payment. The intent is something which my smart contract today cannot measure. So that is one flip side that we have because we cannot have 100% implementation. We will still need a lot of manual intervention. Are you concerned about the increase in artificial intelligence? No, I am not. I'm actually, this resonates with me. I'm concerned about the deterioration in real intelligence. Just because we have systems, we have technology, doesn't mean we don't think. So that's a message for everyone out here as well. So some examples, my last but one slide. Yes, Faircent and Upstart. These are two companies. I don't know if anybody knows Faircent. It's an Indian company. They are into peer-to-peer lending. They came up with a wonderful concept. The concept is not new, but at least in India, they pioneered it, one of the early guys, where they said, no, why do we need banks? Because bank takes money from us, bank gives money back to us. And in between, they earn that good spread. So bank gives me 5% today on a fixed deposit and charges 11% on a personal loan. The 6% is bank's fee only for bank existence, nothing else. So these guys say, okay, you have money and somebody needs money. Both of you come to my platform. So one of the participants, which Arif will have to add in the next slide, is okay, P2P players, because they are providing a platform where borrowers and lenders could meet instead of going to a regular NBFC or a bank. And what they promise is, they promise to check the credibility of the borrower. Because at least in bank's case, I don't have to worry about my money. When I give a FT, whether bank gives money to Nirav Modi or any other person, I have my money safe at least. So here, these guys say, I will tell you about the borrower. These guys, they track more than 100 parameters. They will not only check your CIBIL score, they will not only check your credit history, they will also have a look into your SMSs, emails, which pub you went when, how did you make the payment, how much is your payment on discretionary items, how often do you go to mall, where do you spend, your social media profile, everything. You are at their mercy once you want money from them. Sorry. So that's disruption in lending. So very soon you'll find something similar in capital markets, disruption. So no longer, you want to do a crowdsourcing funding today. You don't have to go to a bank or ask for money. You want to raise capital, come up with a cryptocurrency of your own. You can have an initial coin offering too. The next example that I want to talk about is very popular. How many of you have heard of this name, Small Case? People who invest in stock markets should know about Small Case. So one gentleman here, little bit, sir, I know, but I don't want you to ask question. That kind of know this. His hand is like this. Yes. So what is Small Case? Yes.
Basically, it's bag of stocks. So if an investor, someone who doesn't know about the stock market can actually go and select these small cases, bags of different stocks which are very likely.
Yes. So Small Case is a fintech company which provides investors with an option to build customized portfolios of their own and then probably even give it to others. So if I feel I am expert enough to create a small case portfolio based on some strategy, I can create a strategy, explain the strategy in detail, and whoever wants can take their strategy. And how do they take the strategy? Nothing. You just have to click whichever broker you are with. I spoke about collaboration. So we have at least 8 to 9 brokers in India who everyone uses Small Case. So you go to Small Case, you will see multiple options to invest. You like a certain idea, you invest in that idea. Okay, these are the stocks, whatever little knowledge you have, and you can straight away invest through any of these 9 brokers. So the API is integrated. So that is Small Case. Similarly, we have another one, which is I told you, it's one of my favorite fintech companies in capital markets. Most of the way they have developed everything in-house, no marketing, nothing. It's a case study in itself. So I'm writing one. I'm writing one case study on Zerola. So if you look at tech, they have used artificial intelligence, they have used behavioral finance. What they have done is, if you want to buy a stock which they feel for some definite reason. Now, recently, around a year back, there was a bank which was bankrupt, Lakshmi Vilas Bank. It was getting delisted from the stock 2 days from the day news came. And next day, there were so many people buying that stock. And knowledgeable people are wondering, hey, what is happening in the stock? Why are these guys buying? Because everybody should ideally be selling. So if you wanted to buy the stock and you were on Zerodha, you want to buy on the stock, Zerodha will send you a big pop-up. Are you aware of this news? This is what is going to happen to this stock. Tomorrow the price will be zero. Do you still want to buy? You still want to buy? It's up to you, your money. I can't stop you from buying being a broker. But that's the kind of technology which they have used, integrated in each and every trade. She has given me 2 minutes, but I do not need 2 minutes because... Thank you. And one request I have is, for those who are on LinkedIn, if you can follow Dwara Money as a page, because very soon we are coming up with something called as Financial Inclusion Ambassador Program, wherein we would want to work closely with students looking at 8 to 12 weeks of exposure into finance, personal finance. You can look more about what Dwara Money does. That's for some other day for me. So you can definitely follow that page. And of course, you know where to search for me. So thank you so much. Questions definitely after the show. Thank you.
Thank you, sir, for enlightening us on fintech. Let us now welcome on stage our next speaker, Mr. Kishore B.S. He is the co-founder and CEO of the Stock Market Institute of India, Disruptive Education Services LLC Dubai, and many more. The Stock Market Institute of India has always been one of the most premium institutes, offering a range of courses on stock markets and other products in the financial world in a practical way. He is also director for multiple key projects like IFM Investors in London, which is a global provider of investment services across infrastructure, debt investments, listed equities, and private equity. We welcome you on stage, sir.
I was here to talk about secondary market, and when it is secondary market, it is all about money, right? Buying, selling, everybody knows about it. It's mathematics. There is no rocket science behind it. You buy it at a cheaper price, selling at a higher price, you always make money, right? But I always use something which is my strength, and I'm not very good at maths, nor I'm very good at accounts. I don't understand why balance sheet should tally when my own income and expenditure does not tally. I'm a big zero there. Okay, but I invest my money in markets and make a lot of money out of it. And yes, my business also came out of the common sense that I use. Sorry, I told of the answer. So this is something that I'm very good at. I went to Christ College for a session like this on stock markets in 2009 when I was just starting with my venture called Stock Market Institute. And there I went into the parking lot, parked my bike there, wanted to know where the management block is. Saw a lot of boys and girls standing around the bike. I just went to one of the boys and asked him where is the management block. He told, sir, once you go out, go straight and take a ride, you'll find management block there. Told him, thank you very much. And I observed a particular thing, and that's where I got one of my best investment idea till date. So I just observed that this boy who I asked the address, who had some tattoo kind of thing on his hand and he had studs and he was short with some gel and other thing being applied to his hairs. I just observed this and I asked him one question. Okay, before I tell you what was the question and other things, I'll tell you the name of the company. Probably you should be able to judge which company I'm talking about. The name of the company is called Page Industries. Any idea what should be the question or what was the question that I asked him? Page Industries, any idea what does that company do? Okay, you are there. So what happened is I saw this boy who had worn his pants too loose. It was somewhere hanging in between. I thought I should ask him. I told boss, why don't you wear a belt and pull it up a bit so that it stays where it has to stay. He got angry on me and he's like, sir, you wanted to know where the management block is? I told you, please mind your business. I told him, chill boss. As a friend, I thought I'll ask you. It's very good, please continue. On my way to the management block, even in the corridor, I could see 3 or 4 boys roaming around without their belts. Their pants were also hanging in between. I thought something is wrong. I sat with the HOD for 40 minutes and we were discussing about a lot many other things. And then I was supposed to enter a session like this. On my way to the session, I just met one of the class representative and he was talking with me and I asked him, boss, why do you think people do this? Anytime anything can go wrong, right? So why do you think they should be doing it? So he started laughing and he told, sir, it's a trend. Everybody wants to wear low-waist jeans and they want to show something. That something was nothing but jockey. The same day I came back to my office before lunch, I just started seeing what's happening in the market and I saw that this company is something which is future. So I just started Googling it and I found it to be Page Industry. It is a Bangalore-based company and immediately went online and saw it's a listed company. Bought the shares at 643 rupees that particular day and haven't sold it even today. Don't ask me how many shares I own there, but what do you think should be the price? Yeah. Little bit down because of the last 2 days fall. It's 39,300 and odd, if I'm not wrong. So this is how I use my common sense and invest in markets. Everybody watches TV, right? Anybody who says I don't watch TV at all? Okay, I watch TV, but I always watch ads. The minute any program starts, I get busy on my mobile, but as soon as the ads start coming in, I watch the ads because that is where I get new thoughts and new ideas. And one of these days in 2015, June, I was watching TV and the minute I saw a particular ad, it was a trailer of a movie. On 17th of July, this particular movie released and every other Indian would have watched it. Any idea which was that movie? It was in news 2 days back also because of a sequel of it. 2 days back. No. Which one? Okay. I'll tell you what exactly happened. As I told you, I watch ads. There was this particular movie called Bajrangi Bhaijaan, Salman Khan's movie, whose ad was shown because there was a pipe company associated with them and they never had any ad to show. Astral Pipes. So they just used to show a trailer of this movie and in between they used to say Astral Pipe is proud to be associated with Bajrangi Bhaijaan. At the end of the trailer, I could see a globe on which they used to write Eros. So they were the distributor of this movie. As soon as the trailer of this movie got launched, I saw in 2 days this particular stock jumped up by 20 rupees. 160 ka 180 ho gaya. Common sense, because this particular trailer started catching eyeballs. Everybody started telling that hey, YouTube pe record ho gaya, idhar ho gaya, wo ho gaya, and other things. So it was an opportunity for me to explore. I just bought 10 shares and I kept it. The day movie release, I went with my wife and my son to watch the movie. I'm also a Salman Khan fan. As soon as he came on screen, everybody started jumping like monkeys in the theater. That was how it was. So the movie started making records every single day. First day, opening day record. Second day, Saturday, again it was a record. Third day, again it crossed 100 crores. So every single day, movie started making records. I was happy more than himself, Salman Khan. The day I thought, okay, next Friday, I bought shares at 180 rupees. I just kept holding on to it. 17th of July, the movie released. 23rd of July, I thought it's time for me to sell it off. But 24th, I thought I'll wait. 24th of July, I sold it off at almost 430 rupees. So did I actually pay anything out of my pocket to watch the movie? No, right? So this is something that I'm very good at. I keep observing a lot of things. The minute I stepped into your college, I went into the parking lot to observe a few things. Again, that may give me a next investment opportunity. Okay, all these things are of past. Everybody would say, sir, ye to ho gaya, chodo. Baki ka kya karoge next? Can I talk about next big things that can happen in the markets where I see opportunity? Yes? Okay, there's this particular company called Mirza International, which again I got opportunity because my brother got married. When I was shopping for his wedding, I got this opportunity. I invested in this particular company at 17 rupees because at 17 rupees, I don't get even a dosa in one of the good eateries today. But I got very good company share. I bought it. Within 1 month, it got almost 38 rupees. And I think it's still a very good opportunity. It's right now trading at 117 rupees, if I'm not wrong. What do you think should be this company's product? Mirza International. By newspaper पढ़ा करो बहुत अच्छा चीज है. It's very important for you to read newspaper. No idea. Okay, they own this particular brand called Red Tape, and anybody who gets married definitely buys the Red Tape shoe. Method. Siegfried. I'll ask you one small question. Please cross your heart and tell me the truth. Promise? Promise?
Pinky promise.
Okay, how many of the girls smoke here?
I don't.
Okay, I got my answer. The minute I see the faces, I get to know what is the answer. Very good. Whoever of you smoke, please continue to do so. The company that I would love to talk about is ITC. It's a sick-free business. No matter what happens, people will die, but the company will never die. That's the beauty about this particular business. If the price of cigarette today is 5 rupees and if they have 100 customers, tomorrow price goes to 5.50 paise, they'll have 110 customers. That's the beauty about their business. Again, because of increase in excise duty as well as taxes and other things, if price of 17 rupees is going to 20 rupees, people don't mind shifting to premium brand like Marlboro or anything which is available at 22 rupees or 25 rupees. They'll tell as the price goes up, the feeling is better. I don't know, I don't smoke. Okay, at the end of it, whatever happens, people may die, but the company will never die. They themselves are diversifying their businesses, so I don't have to worry about diversifying my portfolio. So it is common sense to invest in these kind of companies. Okay, this COVID again has helped me out to do a lot of things in a new way. Again, whatever the disruption was shown on board or the slides, only because of common sense. What we did is, as a company, we joined hands with tutors who came in here. They are also part of our tutors. Alok sir is a tutor with us. So like this, we brought in best of the people from the industry, put them all on one particular platform, which is our app. We get best of the sessions from them, which is available at a particular subscription cost, and you have best of the certifying bodies across the globe, which includes ACCA, SEMA, CISI, CMT, and anybody and everybody. We have right now around 16 bodies on our platform. Another 30 may be there in next 6 months' time. So any part of the world, any certification you want, it will be there available on one app, which is called as StockBite. The app is just launched. You can just download it and experience it. There are a lot of free sessions which has been happening. And if you want to go for it, probably we can always talk with your college and we can always give it to you as a product. But there's a lot of things that you can go through it. There are a lot of live market sessions. There are a lot of expert sessions and many more things which have been offered on this particular platform. Any questions that you have, I'm open to answer it. Okay, at last with everyone. Yeah. Any other question? Or any opportunity that you want to know? Or any company that you have in your mind?
Later.
Nothing? Okay, thank you.
Thank you, sir, for giving us a detailed understanding on the secondary markets. I now request Mr. Praveen and Ms. Mridula to escort all our dignitaries to the dais. Now let's have a quick Q&A session. Due to a shortage of time, we would be entertaining maximum 2 to 3 questions. So I request the volunteers to pass on the mic to the audience.
Hello everyone. First of all, thank you for your time and your knowledge.
I had a question with regards to asset management. Basically, in what ways do you calculate the fees which is payable?
Sure. So, yeah. So the fees are basically part of the agreement, as I was mentioning, that when you look at the contract will have the fees and the terms and conditions being mentioned in that. So the fees are usually determined by the product or the strategy which the client would be invested into, right? Uh, Say suppose if it is a passive strategy where it is following an index, right, it would be looking at the strategy, what kind of strategy it is. Is it a high risk? Is it invested more into stocks or more into bonds? Based on that high risk, there's high returns, and equally there is the fees will be high because the managing of those particular assets would be a high risk job for the asset manager, right? So the fees will be higher in those cases. Now talking about the active asset manager, now where there is a time and effort being involved more, the fee rate should be higher in those cases, and all of those would be kind of linked to the strategy when the agreement is being prepared and being signed off by both the parties. Did that answer you?
Good evening. My question is to you, Mr. Alok. So, since you spoke about the importance of tech in finance, so how does someone like me without a tech background get into the fintech space? Like, let's say, if would it be more beneficial for me to take up a coding course as compared to CFA?
First of all, thank you for the question. I was actually hoping somebody asked that because I missed it in my presentation somewhere. No, you do not need to have knowledge of coding or technology, especially coding, I would say, to get into a fintech company space. Having said that, would it be advantage if you know something on the tech side? Definitely yes. The reason being, see, there are multiple profiles within a fintech space. For example, where I work, I am not a techie from any remote angle. The last time I did my computer science was BSc 2002, and that was a mistake. And nothing to know about coding, nothing. That's why it took me so long to understand anything on the tech space. So I talk to product managers, I talk to the guys who are developing the code to understand what language they're using. And honestly, even after they tell me, I don't understand. They say some full stack, this stack, that stack. I don't understand any of it. But equally important is the business side of it, which is where management values come in. So without customers, no app is good, and app cannot sell itself. So you might have the best of the app, the best of the interface. End of the day, you would need somebody to sell it. You would need somebody to manage it, and you would need somebody to explain to the coder, explain to the developer on what is the requisite of the customer. 2 decades back, we had a lovely scenario where people used to work in bank for 5 years, 7 years, 10 years, and easily move on to Infosys, iFlex, TCS, and Wipro. We had 4 companies hiring bankers that time because everybody was developing a banking software, and they wanted somebody to understand banking and tell it in the English language, simple English language, to the person who's coding. So they could actually see the output and see whether this is what the customer needs. Today, we have something similar in the fintech space. We need people who can understand customers and convert it in a simple language. What is the requisite so that the coder can actually develop? So enough opportunities, whether it is marketing professionals, finance professionals, operation professionals, and HR professionals. There are enough opportunities available. Coding knowledge will help you to gel with these teams, the developers, a little faster. That's the only thing. Otherwise, not knowing tech will not be a limitation for a financial intelligence.
So my question is related to commodities and basis trading. So we see that there is always some disparities in the basis trading, and it's also imperfect. So what do you think are the causes of basis trading, and what can make it perfect?
if you want to trade the basis, it's better to have it imperfect, right? That's when you're basically able to understand that. You want to understand always what the relationship of the basis to the futures market is, and why does it change? What
Spot price.
what causes those changes? It could be basically supply disruption. It could be a sudden, demand disruption. It could be either some sort of COVID hits you and there's a certain number of products that people just don't buy. So then those are ones that will cause the. So it's important for us to constantly study mostly what causes that. You don't want to make it perfect, then you're not going to be able to make any money out of it. Basis when you say it's perfect, as I said, at the end of the contract, generally the futures needs to converge with the spot price, and that doesn't generally happen. Yeah, you need volatility. Otherwise, with no volatility, again, there's no fun trading it, right? You need some amount of volatility. It depends on what you want. As I said, my favorite thing is that anyone can trade a bull market, but it takes differentiates a man from a boy to trade a bear market. What did you do in a bear market? First, you basically have a short position, right? In the bear market, that's what you want to do. You must have the guts to short it first. I mean, a bull market, everyone knows. Buy and then okay, I wait for a while and then I can sell it. Yeah, everyone can do that.
Thank you, audience, for your participation in the Q&A session. We would now like to extend our gratitude to the speakers by giving them a token of appreciation. May I now request our Director Father, Manoj D'Souza, to hand over the token to Mr. Pawan Morgoth.
Music. Live music. Adalla.
Thank you, Father. May I now request our Dean, Dr. Raj Gopalan, to hand over the token to Mr. Murli Menon.
Instrumental flute and touch. First in
Thank you, sir. May I now request our faculty coordinator, Professor Ashwin John, to hand over the token to Dr. Chajar. Thank you, sir. Requesting you to extend the token to Mr. Kishore BS.
Load. Sound load.
Thank you, sir. This event has been a success because of the consistent efforts of the Finance Club. Our very own Finance Club head, Mr. Praveen, is a person who believes that hard work and perseverance is the key to success. May I now call upon our Finance Club coordinator, Mr. Praveen Devarakonda, to propose a vote of thanks.
Thank you, Sanya, for such an introduction. So, good evening, everyone who presented here. It's a great honor and privilege to propose the vote of thanks on this memorable occasion. First and foremost, I would like to give glory to the Almighty God for making Finance Conclave as a huge, grand success. I thank our guest speakers, Mr. Pawan Morgoth, Mr. Murali Menon, Dr. Alok Chajar, Mr. Kishore BS, who despite their busy schedules have found some time to grace this occasion. Thank you so much for sharing your insights on across the industry and capital market. We are grateful to our Dean Dr. Raj Gopalan sir for his stewardship support, vision and commitment. And we are grateful to our Director, Reverend Dr. Manoj D'Souza, for his words of encouragement. His able guidance has always encouraged us. I thank you so much, sir. I thank all the distinguished faculty members for accepting our invitation and making the event a fruitful one. I thank Professor Ashwin John, who is a faculty coordinator for Finance Conclave, for always being approachable and his guidance throughout the execution of the event. I thank the core committee team members of Finance Conclave who made it very successful. I thank the choir team for blessing our ears with a beautiful worship song at the starting. I thank the media team for evincing interest in covering the event. And I thank all the non-teaching staff members for helping us with the arrangements to run a smooth show throughout the event. And at last, I thank our friends for your cooperation in making the Finance Conclave 2021-22 a huge success. So with this, I conclude my vote of thanks. Thank you so much.
Thank you, Praveen. May I now request everyone to kindly rise for the national anthem.
Spaces.
ಸೆಕೆಂಡ್ ಉಂಟು ತಡಿ
ಅವ್ರು ಸೌಂಡ್ ಕೊಟ್ಟಿಲ್ಲ. ಕೊಟ್ಟಿದ್ದಾರಾ?
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल गंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जनगण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे
We have now successfully come to the end of the event. We again thank our keynote speakers for the day for taking their presence and the time to be here. Thank you audience for being active participation in the conclave. We are sure that everyone has gained few valuable knowledge and insights from our key speakers for today and on the insights of changing dynamics of capital market in the world of finance of India. Also, this is your MC, Hemant and Sanya, signing off for the day. Have a nice day. I request the student coordinator and the volunteers to kindly escort the dignitaries to the boardroom. I request everyone to kindly please rise as the dignitaries leave.
ಬೇಡ 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 ನಿಲ್ಲು ಬೇಡ ಹೇಗೆ ಕೇಳ್ತದೆ ಬೇಡ ಬಿಚ್ಕೊಳ್ಬೇಡ ಇದು ಎಂಡ್ ಮಾಡ್ಲಾ